Assalamu alaikum wa rahmatullahi wa barakatuhu. Hello viewers, I, Muhammad Abdul Habib, welcome you all to Siasat-Ms intensive supplementary coaching classes. So, in our previous class, we have discussed the topic subsidiary groups. The weightage for which is 5 marks. One problem will be coming for 5 marks. In this topic, we have discussed 4 books: purchases book, sales book, purchase returns book, and sales return book. In this topic, total we have 15 problems. So in our yesterday's class, we have completed 12 problems. Still, we have to complete 3 more problems. Problem number 13, problem number 14, and problem number 15. In today's class, we'll be completing those 3 remaining problems, and then we'll start with the first topic, opening entry or general offer, the weightage for which will be for 2 marks. So let us have a recap of yesterday's class. What was the format for purchases book? The format for purchases book was date, particulars, inward invoice number, LF, which stands for ledger folio, details. Here we'll be showing the calculations, and then we had amount rupees. So the format for sales book was date, particulars. So instead of writing inward invoice, here we have written outward invoice number followed by LF. Then we have details. Then again we have amount. The format for purchase returns book was date, particulars, debit note. We don't have details column for it. LF, amount, rupees. The format for sales return book is date, particulars, credit note, LF, amount, rupees. So these are the formats for purchases book, sales book, purchase return book, and sales return book. So in purchases book, we'll be writing inward, whereas for sales book, we'll be writing it as outward. For purchase return book and sales returns book, we do not have the column details. And instead of inward and outward, for purchase returns, we'll be writing it as debit note. And for sales returns book, we'll be writing it as credit note. Now, what was the procedure to record in this book? If we are purchasing goods, we'll be writing it in purchases book. If we are selling goods, we'll be writing it in sales book. And for purchase returns and sales returns, we'll be considering the names and we'll be cross-verifying it whether we have purchased from them or we have sold to them. If we have purchased from them, then the transaction will be recorded in purchase returns book at the time of returning the goods. And if we are selling the goods to them, then we'll be considering that transaction of returns as sales return. I'll explain you with 4 points to identify whether the transaction is of purchase return or the transaction is of sale return. So first, if it is given as purchased goods from A, it will be recorded in purchases book. Then if it is given as sold goods to B, it will be recorded in sales book. If it is given as return goods to A. So first, this was a transaction of purchases which was recorded in purchases book. This is a transaction of sales which will be recorded in sales book. Now here it is given as return goods to A. So first we'll be considering the name and we'll cross verify with the name whether we have purchased from him or we have sold to him. If it was a transaction of purchases, so from A we have purchased goods. So now this becomes purchase returns. This becomes purchase returns. If it is given as return goods from B. So now we'll consider the name B and we'll cross verify whether we have purchased goods to B or we have sold goods to B or we have purchased goods from B. So here it is given as sold goods to B. This is a transaction of sale. So now this becomes sales return. Sales return. So through the name, we'll cross verify and we'll identify whether it was a transaction of purchases. Then we note it in purchase return book. If it was a transaction of sales, we'll note it in sales return book. But the problem arises when we come to face a new name. If it is given as return goods by Z. So now here the name is given as Z, but we have not done any transaction till here on screen with Z. We have done a transaction with A and we have done a transaction with B. So if a new name appears, then how to identify whether the transaction is of purchase return or the transaction is of sale return? So here are the points how to identify it. At the time of returning goods, we need to check with these two words. Return goods. 2. If it is given as return and 2, then it becomes purchase returns. It becomes purchase returns. If it is given as return goods from, then it becomes, here it is given as returns and here we have from, then it becomes sales return. Even if it is given as return goods by, so here we have the word return and by, even then it will be considered as sales returns. So first the name of a person is given, Abdul Habib Sahab, and is given as return goods. Even then this will be considered as sales returns. Then how to identify whether a transaction is of purchase return or sales return? Only if it is given as returns and 2, then it becomes purchase returns. Otherwise, all other forms becomes sales returns. If it is given as return goods from Abdul Habib Saab, it becomes sales return. Return goods by Abdul Habib Saab, it becomes sales return. If the name of the person is specified first, Abdul Habib Saab, then it is given as return goods. Even then it forms sales returns. Now let us check with this. Here it is given as return goods by Z. So here we have returns and here we have by. So it becomes sales returns. So you need to remember these points to identify purchase return or sales return, and these points will also be helpful to you in solving the problem for ledger. Just to understand the topic, whether it is a transaction of whether it is a transaction related to purchase return or it is a transaction related to sales return. Now let us continue with the topic. Yesterday we solved till problem number 12. So continuing with the topic subsidiary books. Let us continue with the question. Question number 13, page number 114. Prepare proper subsidiary books from the following particulars. The transactions are given for the year 2018 for the month of October. So here we have purchased goods from Amar. So we have here it is given as proper subsidiary books. So proper subsidiary books in the sense we need to read the transaction and we need to identify whether we have to prepare purchase book or we have to prepare sales book or we have to prepare purchase return book or we have to prepare sales return book. Here, first, the transaction is related to purchases, so we have to prepare purchases book. Then we have goods sold to Pawan. We also have to prepare sales book. Then here we have goods returned to Amar. Amar. So it is a transaction of purchase return. So here we have purchase returns and goods returned from Pawan. So again we have sales returns. So for this problem, we have to prepare all four books: purchases book, purchase returns book, sales book, and sales return book. So let us go through it. So here is the solution. Purchases book. What is the format for purchases book? Date, particulars, inward invoice number, LF, details, amount rupees. LF stands for ledger folio. Then we have purchase returns book, the format for which is date, particulars, debit note, LF, it stands for ledger folio, amount rupees. Then we have sales book, the format for which is date, particulars, outward invoice number, LF, details, amount rupees. Then we have sales returns book, the format for which is date, particulars, credit note, LF, amount rupees. Now let us start the problem. October 1st, purchased goods from Amar 2000 rupees. So it is a transaction of purchases which will be shown in purchases book as 2018 October 1st. In particulars column will be writing Amar, and in amount column will be writing it as 2000 rupees. After October 1st, we have on October 4th, goods sold to Pawan 3500. It is a transaction of sales. So this will be shown in sales book as 2018 October 4. In particulars column will be writing it as Pawan, and the amount 3500 will be shown in amount column. Then after October 4, we have a transaction on October 8, goods returned to Amar. So here we have written and Amar. First we'll check with the name Amar. So we'll check with previous transactions. So with Amar we have purchased goods. So it was a transaction of purchases. Now it becomes a transaction of purchase returns. So this will be posted in purchase returns book as October 8. So here we have purchases book 2018 October 8. In particulars column will be writing the name Amar, and in amount column will be writing the amount as 200. After October 8, we have a transaction on October 12 as sold goods to Srujan 8,000 rupees, trade discount 5%. So sold goods means it is a transaction of sales. So first this will be posted in sales book. So here we'll be writing it as in sales book as October 12 Srujan 8,000 rupees. So here trade discount is for 5%. Trade discount is for 5%. What is the amount? 8,000. 8,000 into 5 by 100. 0, 0, 0, 0 gets cancelled. So 5 8 are 40, it becomes 400. So what is the simple, this is the calculation. What is the simple technique to calculate? First we have the value 8,000. What is the simple technique to calculate 10%? We have to reduce 1 0 from it. So out of 8,000, if you reduce 1 0, the value of 10% becomes 800. So in question, we are asked to calculate trade discount of 5%, which will be half of it. 800 ka half kya ho jata? It becomes 400. So even if you go with the calculation, the value is 400. Those who have problem in calculation, you can go with the technique. First, just calculate the value 10%, reduce 1 0 from it. Then whatever the value we are getting, then make half of it, it becomes the value for 5,000. So 5% for 8,000 is 400 rupees. So whatever is the value we obtained here, if we make half of it, it becomes the value for 5%. So here we have sold goods worth 8,000 to Sujan, and we are allowing a discount of 5%. So 400 will be subtracted from it. So the final amount 7,600 will be recorded here. Then after October 12, we have a transaction. October 15, goods returned from Pawan. So first check with the name. So here the name Pawan is specified, and here we have sold goods to Pawan. So on October 4, it was a transaction of sale. Now it becomes a transaction of sales return. So October 15 will be shown in sales return book. So here in sales return book, we'll be writing it as 2018 October 15, Pawan 100 rupees. Then after October 15, we have a transaction on October 17, purchased machinery from Raju 5,000 rupees. So as we are purchasing machinery from Raju, so the general entry will be machinery account debit to Raju account. So as we are purchasing machinery from Raju, the general entry is machinery account debit to Raju account. So we are not going to write this in purchases book as we are not purchasing goods. It is purchase of asset, hence it is not recorded in purchases book. So if it would have been the general entry for purchased goods from Raju, then the entry would have been purchases account debit to Raju account. Purchases account debit to Raju account. But as we are not purchasing goods, so this was not our transaction. Our transaction was purchased machinery from Raju. So as we are purchasing asset, the name of purchases will not come in the entry. So this will not be posted in purchases book. For this, we'll be writing a note that transaction dated October 17 is related to purchase of asset. Hence, it is not recorded in transaction dated October 17 is related to purchase of asset machinery. Hence, it is not recorded in purchases book. Then after this, we have another transaction. October 19, goods purchased from Vaibhav 2500. It will be shown in purchases book as October 19, Vaibhav 2500. After October 19, we have a transaction on October 21, return goods from Sujan 150. So here it is given as return and from. So first we'll check with the name Sujan. So here we have sold goods to Sujan. It was a transaction of sale. So now it becomes a transaction of sales return. So this will be shown in sales return book as October 21. The date will be taken as October 21. Sujan will be shown in particulars column and the amount 150 will be shown in amount column. Then after October 21, we have another transaction on October 24. Sold goods to Ramesh for cash 4,000 rupees. It is a transaction of cash. So as it is a cash transaction, it will not be recorded in sales book. So we'll be writing a note for it that. So we can write a note that transaction dated October 24 is a cash transaction. Hence, it is not recorded in sales book. Then after October 24, we have a transaction on October 26. Purchased goods from Vinith, 8,500. It will be shown in purchases book as October 26. In particulars column, we'll be writing it as Vinith. And in amount column, we'll be writing it as 8,500. Then we have a transaction on October 28. Sold goods to Vamshi on credit, 6,500. It is a transaction of sales, which will be shown in sales book as October 28, Vamshi, 6,500 rupees. Then we have a transaction on October 29, goods returned to Vaibhav. So 250. First check with the name. Here the name Vaibhav is given. And on October 9, we have purchased goods from Vaibhav. It was a transaction of purchases. Now it becomes a transaction of purchase returns. So it will be shown in purchase returns book as October 29, Vaibhav, 250 rupees. After October 29, we have a transaction on October 30, Vamshi return goods 500 rupees. So here the name is given first and then it is given as return goods. So already we have checked with the name. Here we have the name Vamshi. So we have sold goods to him. It was a transaction of sale. Now it becomes a transaction of sales returns. Even if we check with the name which has been given first and then if it is given as return goods, then it becomes a transaction of sales returns. So it will be shown in sales returns book as October 30, Vamshi, and amount will be shown in amount column as 500 rupees. So we have not written a note for this. As this transaction is a cash transaction, it cannot be shown in sales book. So we have to write a note for this. October 24, sold goods to Ramesh for cash 4,000. So as it is a transaction of cash, it cannot be shown in sales book. So we'll be writing a note for it. Transaction dated October 24th is a cash transaction and is hence not recorded in sales book. So now we are done with all the transactions. Now let us just give the total for all the books. So 8 plus 2, 10, 10 plus 2, 12, 12 plus 1, 13. So the total of purchases book here will be shown as total 13,000. Then after purchases book, we have purchase returns book, a total for each, which is 200 plus 2, 450. So here we'll be showing it as total 450. Then we have sales book, the total for which is 7 plus 3, 10, 10 plus 6, 16, 17,600. So here it will be shown as total 17,600. Then we have the total for sales returns book, which will be shown as 5, 6, 750, which will be shown here as total 750 rupees. Now let us continue with the topic. Same topic, subsidiary books. Still, we have two more problems in this topic, page number 115, question number 14. Prepare purchases book and post them in ledger. So in examination, we'll be just asked to prepare purchases book. We won't be asked to post them in ledger, but just for explanation, we'll be discussing how we post them in ledger. The transactions are given for the year 2019 for the month of March. Here is the solution. Here is the heading purchases book, the format for which is date, particulars, inward invoice number, LF, details, amount, rupees. First transaction is given on March 1 as 2019 March 1st. Goods purchased from Praveen 7,500. So the date will be taken as 2019 March 1, Praveen 7,500. And we have March 4 purchased goods from Jagan 6,000. Here it will be taken as March 4. The particulars will be writing it as Jagan and the amount will be taken as 6,000. Then we have a transaction on March 8, purchased goods from Raju 4,000. The date will be taken as March 8. In particulars will be writing it as Raju and the amount will be taken as 4,000. Then we have a transaction on March 12, goods purchased from Ravi 5,500. We'll be writing it down March 12, Ravi 5,500. Then we have a transaction on March 16, purchased furniture from Ashish 2,000. As it is a transaction related to purchase of assets, it will not be recorded in purchases book. We'll be writing a note for it. That transaction dated March 16 is related to purchase of furniture, that is purchase of asset. Hence, it is not recorded in purchases book. Then we have a transaction on March 20, goods purchased from Shravan 7,000 will be shown here as March 20 Shravan and the amount 7,000 will be shown here. As we are done with all the transactions, now we'll be doing the total for purchases book. 7 plus 5, 12, 12 plus 4, 16, 16 plus 22, 29, 30. So here the total of purchases book is 30,000. So in examination only will be asked to prepare purchases book. Just for practice in textbook, we are asked to post them in ledger. So just for explanation purpose, I'm explaining this. In examination point, from examination point of view, we'll be asked only to prepare books, either purchases book, sales book, purchase returns book, or sales returns book. But in examination, posting in ledger problems will not be asked. So here is purchases account. So let us see how we prepare accounts, ledger accounts. So first we'll be preparing purchases account, the format for which is date, particulars, JF, which stands for journal folio, amount rupees, date, particulars, JF, which stands for journal folio, amount rupees. Towards extreme left we'll be writing DR debit, towards extreme right we'll be writing CR credit. So here we'll be writing the last day for the month. As the problem is related to the month of March, the last day for the month of March will be taken as March 31st, 2019. And the total of purchases book 30,000 will be recorded here as to sundries as per purchases book 30,000 and will be balancing it on the same day as 2019 March 31st. Total 30,000 will be taken on both the sides and here it will be recorded as by balance carried down 30,000. The same will be brought down on opposite side as the next day of March will be April 1st. It will be brought down as to balance brought down 30,000. So this is how we prepare purchases account. As we are asked to prepare ledger accounts, post them in ledger. First we have prepared purchases account. Now we'll be preparing all ledger accounts of these creditors, Praveen, Jagan, Raju, Ravi and Shravan. So first we'll be preparing Praveen account. So here it will be prepared as Praveen account, the format for which is same, date, particular, general folio amount rupees, date, particular, general folio amount rupees. Towards extreme left we'll be writing DR debit, towards extreme right we'll be writing CR credit. So we have purchased goods from Praveen on 2019 March 1st. So it will be shown in Praveen's account as by purchases account 7,500. Then after Praveen, we have purchased goods from Jagan. So we'll be preparing Jagan account and we'll be posting the date March 4, 6,000 there. So first we'll be preparing Jagan account, the format for which will be the same. Date, particulars, general folio amount rupees, date, particulars, general folio amount rupees. Towards extreme left we'll be writing DR debit, towards extreme right we'll be writing CR credit. And here the date will be taken as 2019 March 4 by purchases account 6,000 rupees. After Jagan, we have purchased from Raju. So we'll be preparing Raju account. Similarly, we'll be preparing Ravi account and then we'll be preparing Shravan account. So after Jagan, we'll be preparing Raju account and we have purchased goods from him on March 8. So the format for Raju account will be date, particulars, general folio amount rupees, date, particular, general folio amount rupees. Towards extreme left, we'll be writing DR debit. Towards extreme right, we'll be writing CR credit. And we'll be posting it as 2019 March 8 by purchases account 4,000 rupees. And after Raju, we have purchased goods from Ravi on March 12. So first we'll be preparing Ravi account. So here we have Ravi account, the format for which is date, particular, general folio amount rupees, date, particular, general folio amount rupees. We have purchased on March 12th, so it will be posted as 2019 March 12th by purchases account 5,500 rupees. Coming to the last account for the problem, 7 account, the format for which is date particular general folio amount rupees, date particular general folio amount rupees. Towards extreme left will be writing DR debit, towards extreme right will be writing CR credit, and we have purchased goods from him on March 20, which will be posted as 2019 March 20 by purchases account 7,000 rupees. I repeat, in this problem, we are asked to prepare purchases book and we have asked to post them in their respective ledgers. So in examination, we'll be asked to prepare only purchases book, sales book, purchase return book, or sales return book. You don't get any question based on posting them into the ledgers. So the question number 13. So this was question number 14. So question number 14 and question number 15. These kind of problems will not be asked in questions as these are related to posting them into the ledger. Just for practice purpose, we are solving this. So again, coming to the last problem for the topic, subsidiary books, page number 115, question number 15. Prepare sales book from the following transactions and post them in ledger. So our previous problem, question number 14, was related to preparing purchases book and posting them into the ledger. This problem is related to preparing sales book and posting them into the ledger. So the transactions are given for the year 2019 for the month of April. So here is the solution. The heading will be taken as sales book. The format for sales book is date, particulars, outward invoice number, LF, which stands for ledger folio, details, amount rupees. The first transaction is given on April 1 as goods sold to Damodar 8,000 rupees. So this will be shown as 2019 April 1, Damodar 8,000 rupees. Then we have a transaction on April 3 as sold goods to Murthy 6,300. This will be shown on April 3 as Murthy 6,300. Then we have a transaction on April 8, sold goods to Balaji 5,000. This will be shown as April 8, Balaji 5,000. Then after April 8, we have a transaction on April 12, sold goods to Gambhir 2,000. So this will be shown as April 12, Gambhir 2,000 rupees. Then after April 12, we have a transaction on April 16, sold goods to Ashok 7,000 rupees. Then date column will be taking the date as April 16. In particulars, we'll be writing it as Ashok, and in amount column, we'll be writing it as 7,000 rupees. Then we have a transaction on April 18, sold old furniture to Kishore 5,000 rupees. As it is a transaction related to sale of asset, it will not be recorded in sales book. So we'll be writing a note for it that transaction dated April 18. Transaction dated April 18. Transaction dated April 18 is related to sale of asset, hence it is not recorded in sales book. Then we have a transaction on April 20, goods sold to Rao 8,000, trade discount 10%. How do we calculate trade discount 10%? We'll be reducing 10 from the value 8,000, it becomes 800. So here is the calculation. First we'll be writing the date as April 20. In particulars column, we'll be taking it as Rao, and the amount 8,000 will be taken in details column. Then subtracting 10% of it, which is 800. Subtracting 800 from 8,000, it becomes 7,200. So as we are done with all the transactions given in the question, now let us do the total for sales book. So here it will be 7 plus 7, 14, 16, 21, 27, 35, 35,500. So here is the total 35,500. So this was sales book. We are also asked to post them in their respective ledgers. So first we'll be preparing sales account. The format for which will be the same, date, particular. Same in the sense the format for ledger account, which is date, particulars, journal folio, amount rupees, date, particulars, journal folio, amount rupees. Towards extreme left, we'll be writing DR debit. Towards extreme right, we'll be writing CR credit. And just we'll be writing JF here in this column. So in our previous problem, purchases, it was an expenditure. So it was shown on debit side as to sundries as per. So here, as purchases was an expenditure, this is an expenditure, it is shown on debit side as to sundries as per purchases book. Whereas sales, as it is an income, it will be shown on credit side as by sundries as per sales book. So here, the date will be taken as 2019 April 30 by sundries as per sales book 35,500, and will be balanced as writing 35,500 on both the sides and will be balanced on the same day 2019 April 30 as to balance carried down 35,500 and will be returned on opposite side of its immediate next day as 2019 May 1st by balance brought down 35,500. So this was sales account. Now we'll be preparing all the accounts of our debtors to whom we have sold goods on credit. We'll be preparing account of Damodar, Murthy, Balaji, Gambhir, Ashok and Rao. So first we'll be preparing Damodar account. So here we'll be taking the format as date, particulars, journal folio, amount rupees, date, particulars, JF journal folio, amount rupees. Towards extreme left we'll be writing DR debit. Towards extreme right we'll be writing CR credit and the name will be taken as Damodar. So we have sold goods to him on 2019 April 1st. So which will be posted here as to sales account 8,000. Then after Damodar we have sold goods to Murthy. So we'll be preparing Murthy account. The format for which is date, particulars, JF, amount rupees, date, particulars, JF, amount rupees. Towards extreme left will be writing DR debit. Towards extreme right will be writing CR credit and the name will be taken as Murthy. As we have sold goods to him on April 3rd, the date will be taken as 2019 April 3rd to sales account 6,300. Then we have sold goods to Balaji. So now we'll be preparing the Balaji account, the format for which is date, particulars, JF, amount rupees, date, particulars, JF, amount rupees. Towards extreme left will be writing DR debit. Towards extreme right will be writing CR credit and the name of the account will be taken as Balaji. We have sold goods to him on 2019 April 8th. So it will be posted as to sales account 5,000 rupees on 2019 April 8th. Then we sold goods to Gambhir. So now we'll be preparing Gambhir account, the format for which is date, particulars, general folio, amount rupees, date, particulars, general folio, amount rupees. Towards extreme left will be writing DR debit. Towards extreme right will be writing CR credit. And we have sold goods to Gambhir on 2019 April 12, which will be posted on 2019 April 12 as to sales account 2,000 rupees. Then we have sold goods to Ashok. Then we'll be preparing Ashok account, the format for which is date, particulars, journal folio, amount rupees, date, particulars, journal folio, amount rupees. Towards extreme left will be writing DR debit. Towards extreme right will be writing CR credit and the name will be taken as Ashok. The date will be taken as 2019 April 16. As we have sold goods to him on April 16, it will be posted as to sales account 7,000. Then we have sold goods to Rao. So we'll be preparing Rao account as date, particulars, JF, amount rupees, date, particulars, JF, amount rupees. Towards extreme left will be writing DR debit. Towards extreme right will be writing CR credit and the name of the account will be taken as Rao account. And as we have sold goods to him on April 20, we'll be posting it on 2019 April 20 as to sales account 7,200 rupees. So with this, we conclude the topic subsidiary books. So I repeat the points. First, we'll be preparing purchases book, purchase return book, sales book, and sales return book, depending on the requirement of the question. So 2 points to be remembered for solving the problem of subsidiary books, that is purchase book, purchase return book, sales book, and sales return book, is that we should not post these 2 things. One, transaction related to cash purchase or cash sale will not be recorded. And the second thing that we do not record is transaction related to purchase of assets or transaction related to sale of recorded in purchases book or sales book. Next, so the weightage for this topic was for 5 marks. So we have solved all the problems of Telangana State Board of Intermediate Education, TSBI textbook. So now we will start a first topic, journal wrapper or opening entry, the weightage for which is for 2 marks. So the topic subsidiary books was for 5 marks, 1 compulsory problem from the topic subsidiary books, and 1 2 marks problem compulsory from the topic opening entry or journal proper. So page number 116 from TSBI textbook, Telugu Academy publications, page number 116, question number 1. Write the opening entry as on 1st January 2018 from the following. Total assets of the firm are 1 lakh and total of liabilities of the firm are 20,000. So we are asked to find capital. So here is the solution. Here is the formula for calculating capital. The formula will be capital equal to total assets minus total liabilities. So the value of assets are given as 1 lakh and the value of liability is given as 20,000. Applying the formula capital equal to total assets minus total liabilities, it becomes 1 lakh minus, substituting the value. Total value of assets is 1 lakh and total value of liability is 20,000. So 1 lakh minus 20,000, it becomes 80,000. So we were asked to pass an opening entry. So all assets have debit balance. So assets will be shown on debit side as total assets account debit 1 lakh to total liabilities account 20,000. Then we'll be writing it as to capital account 80,000. So how we got the value 80,000? We have subtracted the value of liabilities from the values of assets. So we got the value of capital. So this is our answer, and we'll be writing a note here as being opening entry passed. Here we can write it as being opening entry passed. Opening entry passed. Or else we can also write it as being previous year assets and liabilities brought to current year. Continuing with second problem for the topic, journal proper or opening entry. Page number 116, question number 2. Write the opening entry on 1st January 2019 in books of Karthik from the following. So again, we are asked to pass opening entry and we are provided with some assets and liabilities. Here we have cash in hand, furniture, bank overdraft, sundry debtors, stock, bills payable. So here I will be giving you 5 names. Those fall under the category of liability and will always have credit balance. So we need to remember those 5 names so we can easily solve the problem and we can score 2 marks for this. So these are those 5 names I'm writing here. Sundry creditors, sundry creditors, bills payable, bank loan, bank overdraft, outstanding expenses. Outstanding. Here I'm writing expenses. So these are the 5 names which fall under the category of liability and they have a credit balance. So remember these 5 names, I repeat: sundry creditors, bills payable, bank loan, bank overdraft, outstanding expenses. So first we'll be checking with the names. Do we have these 5 names here? If we have the 5 names, just put a tick mark on those. Cash in hand, it doesn't fall in these 5 names. Furniture, we don't have. Bank overdraft, we have. So first put a tick mark on bank overdraft. Then we have sundry debtors. We have sundry creditors here. So here it is sundry debtors. Then we have stock. We don't have stock in this. Bills payable. Even we have bills payable. So put a tick mark on this. So these 2 names from the given names in the question fall under the category of liability and they must have credit balance as all liabilities have credit balance. So apart from these 2 names, all other names fall under the category of assets and all assets have debit balance. So first we'll be writing all the assets on debit side one after the other. So first we'll be writing the names of assets first. So cash in hand do not fall under the category of liability. So first it is an asset. So first we'll be writing the date as 2019 January 1st. Cash in hand will be posted on debit side as cash in hand account debit and the amount 4,000 will be recorded in debit column. First, the format for journal proper is same as that of journal entries, which is date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees, and the heading will be taken as in books of Karthik, journal proper, opening entry. So first cash in hand, it is an asset. It will be posted on debit side as cash in hand account debit 4,000. Then we have furniture, even it is an asset. So it will have debit balance. So it will be posted on debit side below cash in hand as furniture account debit 15,000. Then we have bank overdraft. It was a liability. So this will have credit balance. We'll be posting it at the end. So just keep bank overdraft aside. Then we have sundry debtors 21,000. It is an asset. So we'll be writing it on debit side as sundry debtors account debit 21,000. Then we have stock. Even it is an asset. It will have a debit balance. So it will be posted here as stock account debit 10,000 rupees. Then bills payable, it was a liability. So out of the names given in the question, only we had 2 liabilities, bank overdraft and bills payable. So only these 2 names will have credit balance and all other names will have debit balance. So now posting these 2 credit balances after completing all the debits one after the other, we'll be posting them on credit side as to bank overdraft, and the amount 6,000 will be posted on credit side as 6,000 rupees. Then we have bills payable 4,000. Even this is a liability, so it will be posted on credit side as to bills payable account 4,000 rupees. Now we'll be finding the value for capital, which is recorded here as capital. So first we'll be writing it as to capital account, and now we'll try to find how we got the answer 40,000. This is our answer. Now let us check how we got the answer. So this is our answer capital. So here we'll be solving it as by applying the formula capital equal to total assets minus total liabilities. I'll write the formula here. So here we'll be writing it as capital equals to total assets minus total liabilities. So how we get the total assets? We'll be adding all the debit amounts. 20 plus 1, 30 plus 1, 10, 40, 45, 50. So the total asset is 50,000. Now we'll be doing the total on credit side. 6 plus 4, it is 10. 10,000. Now subtracting the value of liabilities from the value of assets. So 50,000 minus 10,000, it is 40,000. So this is our answer, which we'll be writing here as to capital account 40,000. So this is our answer, which is not specified in the question. So now we'll be concluding it by writing it as being opening journal entry, opening journal proper pass, being opening entry pass, or else we can write it as being previous year balances have been brought forward. So the same formula has been shown here. So the weightage for this problem is for 2 marks. Compulsory question will be asked for 2 marks. So we just need to remember those 5 names: sundry creditors, bills payable, bank loan, bank overdraft, outstanding expenses. So those 5 names fall under the category of liability and have a credit balance. So here is the formula capital equal to total assets minus total liabilities, which we applied there. 15 minus 10, we got 40,000, which was shown here as to capital 40,000. Coming to next problem from the same topic, page number 116, question number 3. Record the opening entry from the following assets and liabilities on 1st May 2019. So here is the solution. The heading will be journal proper or opening entry. The format will be the same as that of journal entries, date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees. So what were those 5 names that we were supposed to remember? Those 5 names were sundry creditors, bills payable, bank loan, bank overdraft, outstanding expenses. So here I am writing the names again: sundry creditors, bills payable, bank loan, bank overdraft, outstanding expenses. So first we need to check with these 5 names. How many names have been specified in the question? Here we have machinery, bank, bills receivable, sundry creditors, trademarks, and cash. So out of these 5 names, which fall under the category of liabilities and have credit balances. So we have only one name which is specified in the question, which is sundry creditors. So it is a liability and it will have credit balance. All other names given fall under the category of asset and they have debit balance. So we'll be writing them as assets. So first we'll be writing all the names one after the other. First we have machinery. So the date will be taken as 2019 May 1. Machinery account debit 16,000. Then we have bank 12,000. We'll be writing it as bank account debit 12,000. Then we have bills receivable 14,000. Even it is an asset, it will be recorded as bills receivable account 14,000. Then we have sundry creditors, it is a liability. So this will be posted at the end. Then we have trademarks 8,000, it is an asset. It will be posted on debit side as trademarks account debit 8,000. Then we have cash 10,000. It will be posted on debit side as cash account debit 10,000. Then we'll be posting this sundry creditors. Here we'll be writing it as 2 sundry creditors. 10,000 will be recorded on credit side as it is a liability and it has credit balance. then we'll be writing it as to capital account. And now we'll be finding the value of capital. So first we'll find the value of capital by applying the formula capital equals to total assets minus total liabilities. So total assets will be getting by adding all the values of debit amount. 10 plus 10, 20, 30, 40, 50, 58, 60. So the value of total assets is 60,000 and the value of total liabilities is 10,000. Subtracting 10,000 from 60,000, it becomes 50,000. We'll be writing here as 50,000. This is our answer. So, and the narration will be reading here it as being previous year assets and liabilities brought to current year. Coming to next problem. Page number 116, question number 4. Page number 116, question number 4. Record the opening entry on 1st April 2019 from the following. So here again we are provided with some assets and liabilities and we are asked to prepare opening entry. So remember those 5 names which fall under the category of liabilities and have credit balances. Those 5 names are sundry, creditors, bills payable, bank loan, bank overdraft, outstanding expenses. So here we are given with the names buildings, patents, fixtures and fittings, bills payable, machinery, creditors. Out of the names given in the question, we only have 2 names. Bills payable fall under the category of liability and creditors. So we have learned the name sundry creditors. Here it is only given as creditors. So both fall under the category of liability. So bills payable and creditors are liabilities. Apart from these 2 names, all other names fall under the category of assets and all assets have debit balance. So first we'll be writing all assets one after the other. First we have building. So first the date will be taken as 2019 April 1st and we'll be writing the name building as building account debit and the amount 24,000 will be recorded on debit side. Then we have patents. Even it is an asset, it will be recorded on debit side as patents account debit 18,000. Then we have fixtures and fittings 6,000. Even it is an asset, it will be recorded on debit side as fixtures and fittings account debit 6,000. Then we have bills payable. It is a liability. We'll be writing this at the last. Then we have machinery. It is an asset. It will be recorded on debit side as machinery account debit 10,000. Then we have creditors. It is a liability. This we will be posting at the end. So now as we have completed all the assets, so now we'll be posting all liabilities. So here we have 2 liabilities. One is bills payable and another one is sundry creditors. So we'll be posting them on credit side as 2 bills payable account 4,000 and 2 creditors account 4,000. And now we'll be finding the value for capital, which we'll be writing it as to capital account. And now we'll be finding the value of capital by applying the formula. What is the formula for calculating capital? Capital equal to total assets minus total liabilities. So we'll be calculating the value of capital by applying the formula capital equal to total assets minus total liabilities. So capital equal to total assets minus total liabilities. How we get the value of total assets? Adding the amounts of debits. So 20 plus 10, 30 plus 10, 40 plus 10, 50 plus 8, 58. So the value of total assets is 58,000 and the value of total liabilities is bills payable 4,000, creditors 4,000. 4 plus 4 it is 8,000. So subtracting 8,000 from 58,000, we'll be getting the answer as 50,000, which we'll be writing here as to capital account 50,000 and the narration will be taken as being last year assets and liabilities brought forward, or it can be recorded as being last year assets and liabilities brought to current year. Coming to next problem, page number 117, question number 5. Write opening entry on 1st January 2019 from the following. So here is the heading, here is the solution, here is the heading, general proper opening entry. The format for which is date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees. So what are the 5 names that we need to remember? Sundry creditors, bills payable, bank loan, bank overdraft, outstanding expenses. Bank overdraft and outstanding expenses. These fall under the category of liabilities and they have credit balance. So first we'll check what are the names that we have in the question. Debtors, it is an asset. Furniture, it is an asset. Bank balance, it is an asset. Bills, loan from Pawan. Here we have learned the name bank loan. It means that we have taken a loan from bank. It is a liability. Here it is given as loan from Pawan. So here it is bank loan and here it is given as loan from Pawan. It means that instead of taking loan from bank, we are taking a loan from a person by name Pawan. So even it is a liability. So these fall under the category of liability. Bills payable fall under the category of liability. All other names are assets. So first we'll be writing all the assets. So we have two liabilities in this problem. One is loan from Pawan, another one is bills payable. So apart from this, all other are assets. So first we'll be writing all the assets one after the other. Here is the solution. So the format for which is date, particulars, and left debit amount rupees, credit amount rupees. The date will be 2019 January 1st. So first we have debtors. We'll be writing debtors account debit 18,000 on debit side. We have furniture 10,000. We'll be writing furniture account debit 10,000. We have bank balance 20,000. Even it is an asset, bank balance account debit 20,000. Then we have land and buildings at the end. So first we'll be writing it on debit side as land and buildings account debit 12,000. Now we'll be writing these two liabilities. One is loan from Pawan on credit side as to loan from Pawan account. The amount will be recorded on credit side as 10,000. Then we have to bills payable account 5,000. Then we'll be finding the value of capital by applying the formula capital equal to total assets minus total liabilities. Total assets value will be getting by adding all the amounts of debits at 10, 20, 40, 50, 60. So the value of total assets is 60,000 and value of total liabilities is 10 plus 5, 15,000. Subtracting 15 from 60, we'll be getting the answer as 45,000, which will be writing it as to capital account 45,000. And the narration will be taken as being previous year balances brought forward. Coming to the last problem for the topic. Page number 117, question number 6. Write opening entry on 1st April 2019 from the following. Here we have some assets and liabilities. What are the 5 names that we need to remember? Sundry creditors, bills payable, bank loan, bank overdraft, outstanding expenses. So what are the names that we have in our question? Debtors, it is an asset. Creditors, it is a liability. And then bills receivable, it is an asset. Furniture, it is an asset. Bank overdraft, it is a liability. Business premises, it is an asset. Out of these names, we only have 2 names here. One is creditors and another one is bank overdraft, which fall under the category of liability. All other names fall under the category of assets, which are to be recorded on debit side one after the other. So here is our solution. The heading will be taken as general proper, opening entry, and the format will be date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees. The date will be taken as 2019 April 1. First we'll be writing debtors account debit. All debits will be recorded one after the other first. Then we'll be writing credits. Debtors account debit 16,000 on debit side. Bills receivable account debit 8,500 on debit side. Furniture account debit 4,500 on debit side. Business premises account debit 30,000 on debit side. Then we have 2 liabilities here. One was creditors and another one was bank overdraft. 12,000 and 5,000. These will be posted on credit side as 2 creditors 12,000, 2 bank overdraft 5,000. Then we'll be writing it as 2 capital account. How do we find capital? By applying the formula capital equal to total assets minus total liabilities. The value of total assets is by adding the debit amounts. 16 plus 4, 20, 20 plus 30, 50, 50 plus 8, 58 plus 1, 59. So total assets value is 59,000 and the value of total liabilities is 12 plus 5, 17,000. Subtracting 17,000 from 59,000, we'll be getting the answer as 42,000, which we'll be writing here as 42,000. And the narration will be taken as being last year balances brought forward. So with this, we conclude this session, general proper. So the weightage for subsidiary books was for 5 marks and the weightage for general proper is for 2 marks. Thank you. See you all in next session. Thank you.